Hello, hi. Assalamualaikum warahmatullahi wabarakatuh and good day everyone. My name is Khairul. In this video, I'm going to explain about balance sheets, its components, and I'm going to show examples of the balance sheets. The first component for the balance sheet is known as assets. What is assets? The keyword here, asset is a resources controlled by the entity as a result of past transaction, which future economic benefit are expected to flow to the entity. So the main keyword here is resource controlled by the entity, and it's going to give you future economic benefits. So the example of assets is cash. Yeah, cash. If you have cash in your pocket right now, you can use the cash to buy books, to pay for your foods or your bill, for example. So cash is a resource controlled by you and is going to give you future economic benefit. Other example of asset can be maybe if you have a computer. So computer is your assets. Handphone, yeah, if you have a car. So all these are example of asset. These resources controlled by you, and you can use these resources and get benefit from these assets. Okay. Another term here is a result of past transactions or event. Maybe you bought the asset or your parent gave the assets to you. The second element is liabilities. Liabilities refers to the obligation of entity arising from past transaction or event where in order to settle this obligation, you need to pay sum of money or it result in outflow of resources. Example, if you took loan from bank, maybe a study loan. So at the end of the term, maybe every year, you need to pay the bank a sum of money. So this is your obligations. Yeah, loan from banks, maybe loan from supplier or loan from other third party. So this is what we call as obligation of the entity, or we normally use the term liabilities. Okay. The third component of balance sheet is equity. Equity is the residual interest of the owners in the asset. In a simple word, assets minus liability is known as equity, or also known as net asset, the residual interest. For example, you have asset, total value of your asset is 100,000. Your liability value, the amount of liability is 60,000. So your net asset is only 40,000. So this net asset is equal to your equity, that is 40,000. Sometimes we also use the term capital. This is very popular term, and also accumulated surplus fund. Let me repeat again. We have three components of balance sheet. The first one is assets, the second one is liabilities, and the third is capital or equity. Let us look at this example. I put an equation here. Assets is equal to liabilities plus capital. Example of the asset can be land, can be cash, vehicles, stock or inventories, building, and also machine or equipment. The total value of these six assets is 100,000. for example. Okay, and in order to acquire these assets, you borrow money from the bank. So you have a loan from bank. The amount is $60,000. $60,000. So your capital is asset 100,000 is equal to 60 plus the capital. So what is the amount of capital? The amount of capital is $40,000. So this will be your capital. Okay. The formula is assets is equal to liabilities plus capital or equity. Okay, let me give you another example. You decided to start a business in Dubai. Okay, the business, okay, is founded by you, and at that point of time, the business does not have any assets. So you decided to give certain amount of money to the business. You contribute a sum of cash, for example, 30,000 to the business. Now your business has asset. What is the asset? The asset is cash. Cash, yeah, 30,000. And this 30,000 come from your contribution, the owner's contribution. So the capital also increased by 30,000. Is there any liability? No. So this 30,000 come from the owner of the business, come from you. So asset increased by 30,000 and the capital also increased by 30,000. Okay, so assets is equal to liabilities plus capital. Later on, you found that that amount of 30,000 is not enough. So you decided to borrow more cash from the bank. So what you did, you borrowed 20,000 from the bank. So your cash increased by 20,000. This cash is also cash but borrowed from the bank. So your liability now increased by 20,000. So this is your loan from bank. Okay. If you look at this example, we only have one type of asset, that is cash. We have one type of asset, that is cash. The amount is 50,000. Okay, where did I get this 50,000? From 30,000 cash contributed by the owner of the business and 20,000 cash borrowed from the bank. So your cash is 50,000. Now you have a loan from bank. You have a loan or liability, loan from bank. The amount of your loan is 20,000 and the equity or capital contributed by the owner is 30,000. Okay, so cash 50,000, loan 20,000, and then the equity is 30,000. In a simple word, I can say that the business now has cash of 50,000, where 20,000 come from the bank and 30,000 come from the business owner. Okay. Let us continue. Okay, so now we have cash 50,000, we have liability 20,000, and capital 30,000. You decided that you need to buy a delivery van. This is a van. How much this van costs? This van costs you 40,000. Okay, this van costs you 40,000. So how you're going to get money to buy this van? So you borrow from the bank. You take additional loan from the bank. Okay. So what happened to your assets? Instead of only cash, now you have two types of asset. the total amount of assets now become $90,000. Okay, your liabilities is 60,000, and your capital is 30,000. If I reduce the accounting equation, I can say that assets is equal to liability plus equity or capital. So 90 is equal to 60 plus 30,000. Okay. So this is the current situation. We have two types of assets. The total value is 90,000. Our liability is 60,000 and our capital is 30,000. We decided to buy a machine and equipment. Okay, how much this equipment cost us? This equipment cost us 10,000. So now we have three types of asset: cash, delivery van, and also machine or equipment. So where did we get money to buy this equipment? So we use our cash, our existing cash. So our equipment increased by 10,000, but our cash now reduced by 10,000. Why reduced by 10,000? Because we took 10,000 from our cash account and used this money to buy this machine. Any changes to the liability? No changes to the liability, and no changes to the capital. So what is the total amount of asset? The total amount of asset is still the same, that is 90,000. Our capital, our liability is 60,000 and our capital is 30,000. The only thing happened here is the structure or the amount of each type of asset has changed. Our cash reduced from 50,000, now it become 40,000. No change in our delivery van value, and we have new asset, that is equipment, $10,000. Hope you can follow this example. Okay, and then later on we decided we want to add more asset. We already have three types of asset: cash, van, and equipment. We want to buy a piece of land. So how much it costs? It costs you 100,000. It costs you 100,000. So you're going to buy this land 100,000. So the question is, who is going to pay for the land? You only have 40,000. Are you going to take more liability, or the owner will give you more cash, to more money, or the owner will buy the assets for you? So in this example, we pay 20,000 by using cash. So part of the purchase price was paid by using our cash money. So our cash money now reduced by 20,000, and the balance we borrow from the bank. So our cash reduced to 20,000, and our liability increased by 80,000. I repeat again, in this example, we bought a new piece of land 100,000. We paid 20,000 by cash, and the balance was borrowed from the bank. So our cash will reduce by 20,000 and the liability will increase by 80,000. So we have four types of assets now. So 20,000 plus 40,000, 60,000 plus 10,000, 70,000 plus new asset 100,000. So the total value of our assets now is 170,000. How about our liability? Our liability increased to 140,000 while our capital remain unchanged, that is 30,000. So if you total this figure, you will get 170,000 is equal to 140,000 plus 30,000. This is just an example. When you purchase an asset, a portion of it were paid by cash and the balance were borrowed from bank. Okay, and then this is our current situation. We have cash 20,000, we have vehicle 40,000, equipment 10,000, and a piece of land was 100,000. We want to buy some inventories or stock and also a building, a factory, maybe a factory. So how we're going to buy this inventory? The cost of this inventory is 5,000. So I'm going to pay by cash. So my cash will reduce by 5,000, but I have a new inventory worth 5,000. Okay, reduce in cash, increase in inventory. Same category of item fall under assets. And finally, about the building or factory, it costs us 250,000. So when we want to apply for loan from the bank said you already have too much loan, so we are not going to finance your project. So the owner of the business decided that he is going to buy the building for you and give it to the business. So it become the owner's contribution. So the owners bought or make the payment for the building. So the contribution of the owner now increased from 30,000. The capital contributed by the owners increased to 280,000. 280,000. Our liability still remain unchanged. That is 140,000. Okay. If you total your asset will worth 140,000 plus 280,000, that is 420,000. So in this example, we can see that the value of assets is 420,000, okay, which is equal to the value of liability 140,000 plus the value of capital contributed by the owner $280,000. So 420 is equal to 140 plus 280. So these are the three components of balance sheet. Okay. So let me give you example about balance sheet. So balance sheet basically report the financial position of an entity at a specific point in time. So the statement shows asset, liability, and equity. Using the formula we have discussed earlier, assets is equal to liabilities plus equity. So how we're going to present this information? We have two formats. Number one is the account format, and the second one narrative format. I'll accept both format for the exam, so you can choose which one you prefer. For the first format, account format, for example, this is ABC Limited. On your left side, you list all your assets. So we have cash 15,000, delivery van, supplies, equipment, land, and building. The total value is 420,000. So this is assets. Okay. On the right side, you list all your liability and equity. For example, loan from the bank, 140,000, and the amount of capital contributed by the owner. For example, the name of the owner is Alex. So Alex contributed $280,000. So this is your liability plus capital. It should be equal to your total asset. So this is your total liabilities plus equity. Okay, this is your total assets. Okay, that is 420,000. Sorry, 420,000, which is equal to your liability plus equity 140,000 plus 280,000. Okay, so this is the balance sheet. When the users of financial statement read or look at this document, they know that on the left side is all the assets belong to the business. The total asset is 420,000, while on the right side is the source or the source of getting the asset. There is a loan, 140,000, the equity or the amount contributed by the owner, 280,000. The second format is the narrative format, whereby they use this equation: assets minus liability is equal to equity. So we have this narrative format. So we have the date, the name of the company, the balance sheet as at, for example, today's June 2020, and we have long list of asset, cash, delivery when, supplies, equipment, land, building. The total amount of asset is 420,000. And then we list all the liabilities. We list all the liabilities. Yeah, we list all the liabilities. So we have loan from bank, and assets minus liability give you total net asset. Total net asset 280,000. This will be assets minus liability, which is equal to your capital. You can put here capital Alex. Yeah, Alex is the owner of the business, 280,000. So this document, balance sheet, help the users of financial statement to understand the financial position of the business. They help the user to understand the financial position of the business. What is the amount of asset? What types of assets the business has? Okay, and also liabilities. What is the total liabilities? Okay, what are the types of liabilities and how much the owner has contributed to the business? Okay, and let us move to the second document, that is income statement. When we run business, okay, every day the business will generate income or revenue, and we also have to spend a sum of money to maintain our operations. Okay, so at the end of the year, we want to determine whether we are making profit or loss. So we prepare the income statement either monthly, yearly, or maybe quarterly to see the performance of the business. Sometimes income statement is also known as profit or loss statement or operating statement. Okay. When your income is greater than your expenses, I mean total income is greater than your total expenses, the business make profit. However, if your income is lower than your expenses, the business is suffering a loss. For example, if your income is 80,000, your expenses is 50,000, I can say that the business is making profit of 30,000. However, if the income is 50,000 and the expenses is 60,000, your income is lower than your expenses, so the business is making a loss. I put negative here, 10,000. The aim of running a business is to make profit. So by comparing income and expense, we will be able to determine whether the company is making profit or loss. The example of the income statement is Okay, first we list all income. This is your income. This is your income. Okay, for example, our income is 220,000, and you list all your expense. For example, you paid for advertising, for supplies, for salaries, for rent, telephone, for electricity, water, and so on. So your total expenses is 170,000. So your income is 220,000. Your total expenses is 170,000. So income is greater than your expenses. So in this case, you get a profit. So how much is the profit? 220,000 minus 170,000. This gives you a profit of 50,000. So you make profit. Yeah, you make profit. However, if your income is smaller or is lower than your total expenses, the business suffered a loss. Okay, so what is income? Income is an increases in economic benefit in the form of inflow or enhancement of assets or decreases of liability that result in equity other than those relating to the equity participants. For example, if you able to generate more income, for example, maybe selling goods or services, providing service to your clients, rent your building to the tenant, so it will increase your economic benefit. It will increase your cash. Expenses is a decrease in economic benefit in the form of outflow or incurrence of liabilities that result in decrease in equity. So income normally linked to inflow. For example, a rental income. You have a building, you rent your building, so every month you will receive money from your tenant. Expenses is your decreases in economic benefit. For example, your electricity expense. When you use the electricity, every month you have to pay the bills, electricity bills. You have to pay to the provider of the service. In Dubai, is DEWA, so you have to pay them a sum of money. So this is inflow, this is outflow of resources. The third statement is the statement of changes in equity, where it links the income statement and balance sheet. Previously, the capital is 280,000. You make a profit of 50,000, so the capital will grow to 330,000. So profit will grow your capital. So that's why when you run a business, you want to make profit, because your capital will increase. Increase your profit. Plus, if loss, then it's going to reduce your capital. So your capital now is 330,000. And then we have a drawing. What is drawing? Drawing is when the owner of the business took the assets, for example, cash out from the business. The owner took the cash out from the business. So in this example, for example, Alex withdrew 5,000 for his personal use. So that his capital now reduced, his capital now reduced to $325,000. Always remember, profit increase the capital, drawing reduce the capital or equity. I think that's it for now. Thank you so much, Yeah, please do all the exercises on Moodle and feel free to contact me if you have any questions. Bye bye.